Hello YouTube and welcome to Still Not A Millionaire. In today's video I will quickly teach you how you can place a trade and invest either in a stock or bond or an ETF. We'll use an ETF as an example, but all you need to do is all the steps you need to take are similar than the ones we'll see here today. Okay, just a quickly update. This week I made some acquisitions, namely in the tax. I made this company's evaluation in the previous video. Okay, so you can see it. But before that, we had a competition running, which where I offered a copy of the book Rich Dad Poor Dad, and since it is just ended, I wanted to quickly announce the winner, which is José Ribeiro. So I will enter in contact with him soon. And thank you all for participating, and feel free to subscribe. And in order to be aware of future competitions, I'm already planning some additional books, some that I'm making by my own, where I'll teach you how to the basic strategies of technical analysis, and also how you can do a fundamental analysis of a company. But additional news will come in soon enough. Okay. So let's jump right to what we need. Okay, the two main platforms, the two main brokers. By broker I mean the intermediary that connects you with the market. Okay, so the first thing you need to do before wanting to invest and depositing your money is to create an account near a broker. There are several online brokers. Those are the best if you seek low commissions. Okay, you also probably your bank also offers this type of services, but for example, by trading through your bank, by investing in a company or some other financial asset, you probably will pay 5 euros, 10 euros or pounds, US dollars, so on. And for each trade, if you are trading with a small account like I am, it in fact represents a significant percentage of your total capital. So one of the things to be aware of is to look for low commissions, but still with some quality. Okay, this is also important to know that the broker that you are creating an account in is also regulated. Okay, but we'll talk more about that in the future video. Okay, this will be a two-part series where first I want to focus only in the two trading platforms and what you need to do in order to invest in a company, a stock or ETF or a bond, so on. There are a lot of different financial assets. And the main two brokers that I'll be talking about here today is Etoro and also Degiro. Okay, these are the two main companies that I use. Etoro for most of my trades, Degiro for some trades that for companies, for example, that aren't available in Etoro. So this is one advantage of Degiro, but on the other hand, Etoro has no commissions for most assets. Okay, but overall, you can create more than one account in different brokers, and you even try those that you prefer the most. Okay, before selecting only one to trade. Currently I have some of my portfolio in each of my accounts. Okay, but starting with Etoro, imagine for example that I want to buy an ETF. You can quickly create an account near Etoro. It takes like a couple of days, where you just need to verify your identity and transfer some funds there. Okay, and you are ready to go. And you can see these are some of the main groups of assets that you can trade. For example, stocks, ETFs, cryptocurrencies, index, commodities, and so on. Okay, imagine that I want to buy an ETF. Okay, and I want something related to the S&P. Let's see what we have. Oh, we have the SPY. Okay, this is probably one of the most known ETFs. As you can see here, there is one important thing to know, is that Etoro has some ETFs that where you can only trade the CFD, the credit for difference, and others where you are buying really a participation in the ETF. In fact, here most of the times it doesn't make any difference because there are no commissions. Okay, but on other instances you need to be careful to understand what you are buying, because buying a credit for difference usually no, it always requires you to create a margin account. Basically, some of your capital will be kind of retained in order to cover for eventual losses and gains. Okay, so that's the main idea. And some of the times you might have to pay some interest and some other things associated. Okay, so imagine that I've made my analysis and I want to buy my a position in S&P, in this S&P index. You just need to come here and trade, and first make sure to see if you are buying, if you are going long. Okay, so if you are buying a position or if you want to short this stock. Okay, so in order to set a short position, I would need to be aware of well, these requirements. So for example, if I would invest this amount, this trade would close, for example, if losses exceeded $45, okay, so it is basically a stop loss that Etoro automatically sets. But most of the times I think that will open long positions. If you are if you are like me, you are more comfortable with opening long positions. So what you need to do here is that in Etoro you have two available options to trade. Okay, you can either trade at market. Today market is closed. Okay, I'm recording this on a Sunday, so market is closed. But if you place your order like this, you would invest around $90 and at whatever would be the market quote and when it opens. Okay, on the other hand, what I suggest you to do is to come here and select, it's basically a buy limit order, where you set at the price that you are willing to pay for the stock. If you are buying, you'll probably want to pay something around this value, slightly lower. Okay, but make sure that you don't put it excessively lower, otherwise you might not be able to open your position. Okay, but imagine that I wanted to open my position at the previous close. Okay, in this order, by setting the limit buy order, I would guarantee that I wouldn't buy at an unfavorable price. If, for example, the price would increase significantly and just to decrease. This is important in most volatile stocks. Okay, ETFs probably aren't the best example for the importance of this type of order, but most of the stocks, and with the volatility that we are seeing in the current markets, it is something that has gained some relevance. Okay, so make sure to be aware of this. Before placing a trade, most brokers also give you some information about the commissions you are paying, and this is something important so that you aren't surprised after you open your position. As I've told you, Etoro doesn't require you to pay any fee, neither daily or by holding your position through the weekends. The same happens here in Degiro and in most other brokers. Okay, so if you simply want to buy an ETF, for example, you can come here to browse products. This is translated by Google. Okay, so one of the problems of Degiro is that I didn't find though any way to translate the page, so it is mostly in Portuguese. So if you want to also find, for example, an ETF, you have a lot of options here: share stocks, okay, options, futures, leveraged products, bonds, and so on. I've chosen ETFs to keep with my previous example, and for example, imagine that I also want something related to S&P 500. One advantage here is that you can also select, for example, those ETFs. There are some ETFs that Degiro offers for free, and we have a list of available ETFs here. Imagine that now you want to open an order in this ETF. Okay, you can either purchase or acquire a long position or sell this asset. If you want to take a long position, if you want to simulate a similar scenario that we have seen in Etoro, okay, you can either set a day order or keep it going. Basically, in the first option, your order will be filled if it happens, if the criteria is satisfied in the current day, okay, so if you set a price and it isn't reached in that day, in the following day this order is cancelled, okay. On the other hand, if you set a continuous order, this will continue until it is finally filled, okay. You can either set a limited order similar to what we have seen in Etoro, okay, where you would define the price that you wanted to acquire this ETF in this case, okay. You could also use a market order, stop loss or stop limit. These are set when you already have either a short or a long position and you want to limit your losses, okay, or you want to limit also your gains, okay. So if you reach, for example, a 20% profit, you might want also to secure your profit and move on to another trade. You can also set this type of options. So imagine, for example, that this was trading around 85, okay. Let's see, for example, I wanted to trade at 85. I want to pay 85 euros per share, let's say, per each position in this ETF, and I wanted to acquire one. As you can see, it automatically calculates the total amount that you would have to pay. If I set my trade, as you can see, I thought that the Degiro also shows here the commissions. I don't know if it is because I'm trading an ETF, but overall it often shows you also the commissions you are paying, or even if I think that I had to confirm in order to open my position. Yes, so I have just opened my position. Since it is Sunday, I can quickly come here and reject, okay. So because in fact I don't want to acquire this ETF, it was only just an example to show you how you can quickly open a trade. If and when markets opened, if price reach 85 euros per share of this ETF, okay, then my order would be automatically executed and I would be owner of one share of this ETF that would replicate the S&P 500 index. As you can see, it is quite simple to invest and you don't need to be scared. You just keep in mind that you should start small and start carefully. Most of the times the motive, the reason that you lose money is because you are not aware of what you are doing, okay. So try it small and well, obviously you will make some losses, but everyone makes losses in this game, and don't be afraid of it, because in the long term it can be quite some nice way and an interest way to make your money work. If you are starting, ETFs are probably one of the best options. You can find a lot of information out there, and but the basic idea of ETFs and why I've shown you this video is that well, it already replicates a sort of a portfolio that comprehends a significant number of stocks. I'm talking about ETFs regarding the stock market, but you can find ETFs associated with bonds and so on. But the main idea is that it already automatically diversifies your investment and reduces the risk that you would face if you have invested only in a few selected companies, which is also something good for, especially for those who are beginning their journey in the investment world. Hope you have enjoyed. In the following video we'll do a quickly comparison between these two brokers and why I prefer one over the other, okay, in some characteristics. So if you enjoyed, feel free to subscribe. I will try to catch you on and see all of your comments, and don't forget to like, and I will see you in the next video.